Hi everyone, we're live with This Week in Coverager, the week of July 24th. How'd I do?
You know the
Not
dates
bad.
better than we do.
It's Salmon Pink Shirt Friday, so I have that going on. I usually end the podcast telling everyone to be safe and to wash your hands and wear a mask. I'm going to start it that way, just in case people don't get to the end. So don't be a dope. Just wear a mask. It's not that big a deal. Come on, wash your hands. Be respectful of people. Now, let's jump in. Shefi, Avi, happy Friday. Good morning.
Good morning. Good
Good
morning,
morning.
everybody.
Yeah, it's good to see you. Another really packed week with news, like news that were not maybe in volume, but I think importance. And I think we're going to be spending most of the show talking about that. So I'm going to kick it over to you, Shefi. What is the first topic that we're going to talk about in This Week in Coverager?
So clearly Hippo, because of the size of the round. So Hippo announced 150 million Series E round. So you guys all know Hippo, but I did a little bit of a timeline for you. And I can't believe that in 2017 I wrote this. This is something about personal growth, but it still sticks. But in 2017 I wrote Carrie Bradshaw meet Lemonade and Mr. Big meet Hippo. And I'm not that big of a fan of Sex and the City, but the whole idea was back then Lemonade, renters insurance, Hippo targeting homeowners and somebody with a little bit more substantial income. I think that statement still ages well. We are seeing Lemonade do a little bit more in the home space. But if we quickly go through what Hippo has accomplished over the years, which is, it's been a few years, right? So we first covered Hippo in 2016. Back then it started with $14 million in seed round. One of the founders was RPM Ventures, which has a connection to Roost. So you understand why at one point Roost and Hippo had a partnership. So always look for the ecosystem of these startups because that tells you their potential or how easy it's for them to tap into new partners. A quote that's worth mentioning by Asaf was, we took everything that's wrong with the current state of home insurance, the confusing forms, the outdated policy terms, the agent as middleman, and fixed it. I know Avi's going to get to that, right? They didn't really fix the agent as middleman. Maybe something wasn't broken and they probably discovered that along the lines. But they had in 2017, a short experiment with AI chatbots on Facebook, which they saw that with Alafris, if you remember him as a vendor, they took that down, right? So they start something, they learn, they move on, but they're very targeted in terms of what they're focusing on. Still 2017, they were still in beta. They obviously announced executive hirings. They went live in California. That was their first state. And I really like their tagline, right? It was superior in protection, superior in prevention. I think the focus, obviously they give you a lot of add-ins to their policy. So if I think about it, they mentioned appliances repair, rebuilding cost protection, work comp for nannies. So they do go into coverage and try to make it unique. In terms of superior in prevention, they're always talking about smart home. I think smart home to Hippo is basically what AI is to Lemonade. It's a way to capture attention. At the end of the day, if we move forward to 2020, and in the press release, they mentioned that they've given or sent over 400 smart appliances device, then that is still a portion of the segment that they're reaching, right? Because it doesn't translate into 400,000 policyholders. So that piece is more hype to me. But back then, it's Topa and Swiss Re were partners. They eventually went on and added their state in Arizona. Fast forward 2018, Spinnaker is an insurance partner. They do have quite a bit of acquisitions, right? They acquired Spinnaker, Lennar, and Shelter. So I almost think that this funding should have been announced with the acquisition of Spinnaker because we're talking like very close timeframes here. And, we don't know the pricing of any of these customers. This is still a private company, so they're keeping data to themselves, but still an interesting play. In terms of vendors, they work with Simply Safe, Arturo, they work with Neptune for flood, and there's Zesty AI. So they really do like to talk about the technologists in them, less about the agents in them. And with that, I'll kick it over to Avi.
Hippo, I think to give them credit, in my opinion, their biggest success was working with agents. And if I look, for example, at ClearCover, on the other hand, trying to recruit agents and not being so successful, Hippo is. If you go to Facebook groups, you see people really loving the product. And why do they love the product? Of course, the price. They find it to be competitive in some areas. And the technology, they're happy that they could quote pretty quickly. But, it's still the same insurance company. Hippo still sends out people to meet agents to see if they're a fit. I understand they're having some issues in Texas where they're not quoting in some zip codes because of losses and things like that. So it's exactly the same, but really I'm giving them credit being able to work with agents. Which is really giving them the growth. That's their number one revenue generators. It's not direct. It's not the 90 seconds or 60 seconds where you would think, a consumer would say, let me just go online and save a lot of time. And no, it's the agents that are driving the growth for them. I had a thought, and it's interesting. And you look at Lemonade versus Hippo, and I always thought there was some kind of competition between the two companies, at least between the founders, or at least one was looking at the other. And I think it was 1.5 billion valuation this latest round.
Yeah.
And you look at Lemonade, it was rumored that when SoftBank invested in them, it was around 2 billion valuation or something like that. And I believe Hippo is reaching 200 million in premiums. Is that right? What I saw? 270. Lemonade, how much do they have in their IPO? 450, something like that when they disclosed their... No, less, 100 and... yeah.
125, 130. It's higher now, but at the time, yeah.
So look at the difference and in the valuations and how much money Lemonade raised versus how much money Hippo raised. So Lemonade got a round that was 300 million, the SoftBank last round, right? That was the amount. And you look at Hippo. So it's so interesting to me how I feel it's really driven by the founders, the whole valuation, not the market. It's not the market, it's the founders, because clearly the home insurance market is bigger than the renters market. But, Lemonade was able to attract more dollars. When they went for their IPO, their market cap was, I think it settled on like 4 billion or something, which is really amazing. But I think, Hippo, they're very goal oriented. They know what they're doing. They know where they want to be. I'm not sure it's going to be enough to reach that valuation of Lemonade, but they're on the right track.
But it should be.
We'll see what happens next year.
So I'm starting to think how they're not competing directly with Lemonade more and more as I delve into this, because Lemonade attracts the first-time insurance buyer, which is a lot more challenging in my mind than taking somebody that is, getting a mortgage and has to buy home insurance, which typically is a mandatory product.
I agree with
right?
that. I agree with
That's
that.
one. Yeah. The second thing is, I know you say they know what they're doing. They've also they wanted to do things that didn't really mature, right? They wanted to launch as a full stack insurer. That didn't happen. So,
by saying they know what they're doing, and I'll give you an example. Compared to other insurtechs that are sitting and waiting for, I don't know, God to help them, they said, we're going to go after agents. We're going to work with agents because we have to. And they were very quickly to not, say this is not an avenue we want to explore. For a lot of insurtechs, it is too late now to work with agents because other insurtechs have already captured that space. So Hippo was saying, this is not working.
And they don't apologize, right?
No, they don't apologize.
Absolutely, yeah. And they show results. So obviously with all their investment, some of these are recurring investors, they move on. The word on the street is whatever makes sense for Hippo makes sense for Hippo. As vendors, it's not entirely a win-win situation, and I'll keep that as that, right? So they're shrewd. To your point, they go after their target goals. Like they'll try, and even if they fail, there's not that many failures yet they'll move on. But Lemonade is going the route of having multiple products, which I don't see Hippo mention at all. So I don't know, maybe we'll be surprised, but they seem to be targeting on the home insurance front, right? Obviously with these acquisitions, their hands are tied with operations. They're talking about adding 100 more folks into their new office in Texas. So lots going on.
So I sort of view it this way, right? Well, I put Hippo and Lemonade. Let's just put those two side by side because I think we're going to introduce a couple others shortly. Both are on digital substrate. I'll use Daniel Shriver's term, right? Digital substrate. So they're digital to the core, started from the ground up. Here are some differences. So like you said, Lemonade is focused on a lot of first-time buyers, mostly renters market. They do homeowners, but they're struggling to get into that space. I think there are some reasons why. Hippo went homeowners first. Homeowners is like an $85 billion market. Renters is $5. Hippo getting a piece of the homeowners market, a bigger piece, I think is much more substantial and much more likely to actually occur. And they are dramatically actually. So Lemonade made they use ISO forms. There was policy 2.0 really hasn't kicked in yet here in the States. So their coverage form is very similar to any other renter's insurance, whereas Hippo has detoured on coverage form. They have redesigned the coverage form to reflect modern society. So it's the language in the form is you'll see more words related to digital data and things like that. Whereas, old ISO form still talks about FERS and stamps and certificates and stock certificates and currency. Hippo changed that part of it. And I do think, I don't know if they'll ever be able to get the expenses out of control, but you can see this transition where, Shefi, you said Lemonade focused on AI, Hippo on like the smart devices, but smart devices are real and it is potentially a value add. Like there's a route there.
Hold on. Of course, smart devices are real. The question is, how real are they in the insurance value chain in 1, acquiring new customers, 2, mitigating claims, okay? Because Hippo, if that really was a big part of their value proposition, they wouldn't have had to work with Roost, Notion, Kangaroo, and keep on adding vendors. And by the way, Notion was just recently acquired by Camcast. So these partners are struggling with their own entity, just being able to stand on their own. And I do think, customers that care about their home, they care about their home regardless of the insurance proposition. There's certainly an element of first, we care about security, then we care about home leakage. I mean, just in the same context, Flow was acquired, and it's a really higher price point. So the whole smart home property telematics is a conversation within itself. Tons of flows, tons of black holes. And what I mean by black holes is carriers that go into a pilot in, 2 states, 2.5 states, and that's it. You don't hear any more about what happened, what the results are. So, the minute you hear from Hippo about what it actually looks like working with Notion and working with Kangaroo in actual dollar signs, then I can take that with just more seriousness. But for now, I think it's a marketing hype.
It might be, but I think I think someone has to figure out how to put the pieces together. So the smart devices aren't going away. So
I wonder, Nick, but if you have, like, for example, customers today that have a Ring camera, right? They said that it's lowering burglaries, like, kind of reducing the amount and all that.
Yep.
And in that case, every home insurance company that did not provide that Ring camera is benefiting, of course, right? Because the customer is still paying the same price. They installed the Ring themselves, and they're all happy because less people are unwanted people entering their home. So I wonder if this is not going to be something where, again, whoever cares, puts it there, because I don't see Hippo buying someone a Ring camera. That's too expensive.
No, but I think so. The economics haven't been worked out yet, right?
Yeah.
Let's not talk about the Ring camera, because I think that's not going to move the needle, right? I think let's go to Shefi's example, Flow. Flow does move the needle. Internal water. My interview with Lori Connor from the detection group, right? Internal water damage by far exceeds fire damage. Internal water damage is a much bigger problem.
But for commercial or residential?
Both.
She was talking about commercial primarily.
Yes, but it's both.
Okay, but Flow, the price point of Flow is $500, $600, $700, depending on where you shop, right? And
Sure.
when we're talking about a water leak detector, a lot of these claims oftentimes don't make it to an actual claim. So there is leakage and they move on because there's deductible, or they don't want to move forward with actually claiming on their policy. And so that number is really a question mark, right? So if anybody knows what we're actually, you know what, the other way to look at it for Hippo, it's about 10 to 15% discount if you install these products. So that's what it boils down to.
Yeah, but I think, Shefi, part of that is that they don't know yet.
For sure, they don't know. Yeah,
Yeah.
they don't know.
The 10 to 15% is, like, okay, let's we'll make it. We'll give them some sort of economic benefit for it, but we don't actually know how this is going to affect claims. I think they need the loss experience to sort of justify it. But listen, it's probably a little bit of confirmation bias, because my long-term vision for insurance is that there would be more of a partnership between risk mitigation, risk prevention, and insurance. And Hippo has been the one company that has been a little bit more forward-looking in the policy form. And I envision that, like, giving the device, the nest, and then giving a discount. Yeah, it's clumsy. What I want to see is specific language in the policy form that says, you will use this. It will be turned on. And this is the kind of thing, there has to be more of an interplay with the contract language on the policy form for me, for it to work. But Avi, even in your case where Hippo doesn't give them away or whatever, someone that does buy a nest could realistically say, hey, I just spent a couple $100 on this thing, and this homeowners company is actually going to give me a discount. It could be a marketing tool as well. And I think that is a big difference between what they're doing and what Lemonade's doing. I think Lemonade's making impact on the margin. I see Hippo making much more substantial, doing much more substantial experimentation within the model, policy forms, coverages, rethinking.
It's an interesting, really, debate, and kind of in a way, Hippo is coming with this like Swiss Army knife that can do this and peel bananas and tomatoes, and it's a toothpick and it's a flashlight and all that. And he's really taken the effort to really sit down and look at the policy coverage and add, air conditioning and smart home things like the warranty. Usually the home warranty companies will take on, and he really does that. Hippo does that. But if I look at Lemonade, and at the end of the day, Hippo, if you bring now the best creative person to work at Hippo, okay, you give them an unlimited budget, and you tell them, okay, you go be confident. You go say we're better than the rest, just like Lemonade did. They don't have that confidence. You know why? Because it's not going to work on that audience. It's not going to work on homeowners. With first-time renters insurance, or having the confidence to say, this is going to cost you $5, and it is. And it is. Again, we talked about this. Where else do you see an insurance company putting the price and standing behind that price? Lemonade. No one else, really. You don't see anyone else, even, Travelers starting from, or anyone else.
I think that's going to change.
It might be, but for Lemonade now, I think that's where Lemonade, for investors and, for IPO sake and all that, they can prove that they have a bigger potential because they control their destiny. With Hippo, that is reliant on agents, he doesn't control his destiny. That's some agents would argue that they own that client. That's what they believe. Hippo thinks this is my customer, right? I'm writing the risk. So you're going into this now debate. You'll have other insurance companies saying to that agent, hey, listen, here's an incentive. Come bring all your Hippo clients to us next year. So it's a really difficult situation for them. I think, as Shefi said, like that claims, smart home, that was their AI as Lemonade. It's not as attractive to me. I'm not saying that smart home can't prevent claims. I'm sure it can. I'm sure it's going to take a long time to see what the actual dollar amount is and if it really is worthwhile, because if you're giving out to 1 million policyholders and it prevented claims to 2-3%, is that worth it? Maybe not. But it's just amazing to see two companies with kind of same mission to disrupt insurance in a way, taking two very different approaches. One going really deep, working with agents, talking about how their policy is better, and one talking mostly about price and customer experience, because Hippo's claim process, a quote process, in my opinion, is better than Lemonade's. When I quoted home insurance on Hippo versus Lemonade, Hippo knew to tell me that the roof on the Brady Bunch house wasn't replaced since the 70s. Lemonade didn't even ask for that. And Hippo said, we cannot cover you because you didn't replace the roof. It was faster. But again, it's all, at the end of the day, you look at it, you have to really look in the mirror and say, can I get excited about this? Like, can you really get excited about Hippo or Lemonade? No, but Lemonade really is, controlling their destiny, controlling the message. They will come to investors and say, agents, we're going to give out every year a commission. Where's the profit? The whole concept is saying we're digital. Customers come to us. We don't have to pay that hefty commission. Obviously, they pay a lot in marketing, but it's two different approaches. And it will be interesting for an IPO, the fact that he's saying that they're going for an IPO. So an acquisition is off the table. And that, to me, is like, why? Couldn't you find like a progressive to say, hey, we really like what you're doing. Let's give you that money that you want. Here's the reward. Or is it, again, a too high of a valuation because obviously they're not profitable? They're spending a lot. So
it's probably too high of a valuation.
Exactly.
So
exactly.
But I can get excited about it because I think
I would be excited if I was Asaf. If I would be now the CEO of Hippo, I'm very excited.
Yes, of course. But I'm viewing this beyond just the smart homes, the smart devices, the acquisition of Shelter, for instance. I don't know if this is true. I don't have any, I'm not privy to any information over there. I wouldn't be surprised if you start seeing some of the warranty insurance leaking into the homeowner's insurance, where their view of their solution is beyond just risk transfer. We're going to help you take care of your home. We're going to protect your home.
This week, I forget the name of the company, covered your story. I believe State Farm invested, Liberty Mutual invested. Homey. Yes. I thought that was very interesting to your point, Nick, going beyond just like protecting, but also making sure the person's home is well maintained. So it's an app that allows people to, order contractors on demand. And now they're going into the claims. They're telling insurance companies, let us handle your home insurance claims. We have already people download the app. We'll do it co-branded. They take pictures, they take videos, kind of streamline the process. And also you'll be able to dispatch contractors, like to go fix that refrigerator or that leak or that toilet, whatever it is. And insurance companies, I think it was Liberty Mutual, State Farm, the Hartford as well, invested in the company. So
but the only difference though is that Hippo, like Lemonade, can pilot and get into production faster.
Oh, for sure. But
so that it's an advantage. And similar to, I remember listening to the CEO of Metromile talk about this, auto insurance company with the device, and he was talking about how the device can tell you when you need an oil change or when something's wrong with the car, and if something's wrong with the car or the brakes, that could potentially lead to an accident. So we're going down that road. So it's how do you pilot these things and get them into production faster to figure out what the appropriate economics are and get them into the business model. That's the part I like more about Hippo than Lemonade. I don't think Lemonade is bringing anything that's new to the table.
No, of course not. Not at all.
Hippo is inserting elements and basically changing the business model of insurance and going toward, frankly, going towards the path that I think we should have been going. So that's probably why I like them better. But Shefi, there's Avi brought up two different approaches. There's a third approach. There was other news this week of another company that raised money. Do you want to bring that up?
Okay, so Branch, right? Branch announced their first round, 24 million. And the concept of Branch is bundling home and auto insurance. So that's one piece. There is also a community piece. And let's see if I remember the community piece.
The safety,
the ability to pledge for
for people that are underinsured or can't afford to get insurance. It's called Safety Nest. I believe it was called Vouch in the beginning,
right?
It
used to be called Vouch. That's right. Yeah. And I don't know in how many states this is actually live. So a small subset of the proposition there, but at least they're I know from speaking with one of them is that community is going to be a big aspect for them, right? So they do want to take back insurance to its roots and do good and the stuff that we've been hearing. It feels like a bit too early to comment because there just hasn't been much coming out from the startup yet, which is expected because it's still early stage.
I sometimes I argue with Shefi about this, about the community and the charity and going back to roots and all that. Most customers don't care about that. If they want to give to charity, they'll give to charity on their own. The whole Lemonade social give back, that's bullshit. Okay, most customers are not moved by it. They don't need you to donate 10 cents on their behalf at the end of the year. They give more on that, to the subway, to homeless people, or they volunteer, all of that. So if you're an insurance company, and this is again where I disagree with Shefi, we always argue, don't think being charitable on behalf of consumers is going to get you anywhere. It's really not, unless you really do something, I don't know, out of this world. So I don't buy that. I don't buy the whole community. Their biggest insight, which I like for them to be focused, and I think it's a good thing, is they believe that customers who bundle are more loyal, more profitable down the road. And obviously, we see Progressive with the Robinsons, and then Geico is now all of a sudden like, oh boy, we need to have our own Robinsons. That's great. It's good to be focused. We always talked about how insurance, it's very hard to be a generalist. Like you really need to find your area, and Branch found that. Now the question is, can they get those clients? That's the question. That's the ultimate question. And I wonder what they're doing. And we discussed before the show, are they going direct? Are they looking to work with agents? If they are looking to work with agents, they need to kind of stand in line because there's a few big insurance companies ahead of them. But I assume their technology is going to be an advantage. And I know they really have cool tech where you can actually quote quickly and, get the price. So I think that's a good advantage for them.
Yeah,
but that's the question.
That's the problem with bundling. So I don't think there's any doubt anyone would say that folks that bundle are going to be more loyal. It's more difficult to break that, break them from that. And
Progressive, by the way, says these customers cost more to get.
Yeah, I'm not sure.
Yeah.
I'm not sure.
That's what they're saying.
I'd have to think about that. I'm not sure. But let's talk about bundling, right? I'm a huge fan of bundling. I think in insurance, I think there are two ways for an insurance carrier to optimize their risk, right? And one is to spread it out geographically, but also to offer non-correlated coverages as well. So for a single buyer to maximize the amount of premium that you're collecting from them. I think is a great strategy. So I appreciate the bundle. Historically, what does bundling mean? So I had for years an auto and homeowners with Travelers, two separate policies, two separate underwriting systems. I had to go through both sets. It wasn't like one set of questions. That's a problem. It's I'm stacking time on top of one another. Secondarily, it was two different billing systems. So I'm getting two different bills. Pain in the butt. I'm getting a bill. It's like, well, which one is this for? It's got this complicated policy ID number. I don't even know which one this is for. That's a problem. Then it gets to coverages. They're two distinct policy forms. So there's there's no overlap whatsoever. One covers one thing, one covers the other. So I think the first two that I talked about, I think branch addresses, right? Single entry in, right, covers both auto and homeowners. You don't have to do, if they do two underwriting systems, Joe Emerson's probably listening to this. He's probably designed it so it's done. It's extracted from the user. They don't know what's happening. So that's ideal in terms of time and simplicity. The billing should be one bill to get it over with. I don't know if there's any dovetailing of coverage, but what I find interesting here, we talked about this at the beginning. This is so it's a more digital focused company again. So we're now seeing all of these startups. We knew Lemonade wasn't going to be the only one. There's a string of these coming on. They're digital from in the DNA, from the core, right? And they're figuring out a whole bunch of different ways to be faster, more efficient, and all of that. And they're all taking different routes. So Lemonade started with the renters, and they're going to claw their way up the ladder. Hippo started at a bigger market, and they're looking to kind of chip away at it with a more modern form, etc. And here comes Branch that's saying, we're going to bundle. We're going to go after the auto homeowner and acquire those customers, do really good for them, and have a more loyal, more stable, less volatile premium over time. We're going to add another in this conversation, but Shefi, that's what I find most interesting about the InsurTech now, and what I've been telling investors in InsurTech is that this is different than tech investing. In tech investing, most of your ideas, most of your investments are going to fail because it's more of a winner-take-all model in tech. In InsurTech, all three of these companies are going to survive, right? They might get acquired or whatever, but I think they're all going to acquire customers. They're going to grow. I think they're going to be fairly effective, as effective as the industry, maybe more, maybe less. But I don't think these three companies are going to fail. Like that's the difference. The probability of outcome is very different in InsurTech. And that's what I find so interesting is that I think there's less upside because it's not winner take all, but it also reduces the downside. If you can get in and get past a certain threshold, you're likely to survive. That's what I find most interesting about this. They're coming at it from different angles, and they're probably all going to make it.
Nick, do you think, a quick question, do you think Hippo should acquire Branch?
I have no idea.
As a way to get into car insurance?
I don't know.
That would be interesting. I know Lemonade probably wouldn't do it because they think they can build the world themselves, so they have that approach. But Shefi, yeah, what were you saying?
Maybe Root should acquire Branch.
Maybe Root.
Because Root is in the home and auto insurance space. So I think this is one thing I would tell investors. These InsurTechs are more likely competing with other InsurTechs than they are with incumbents. So everybody wants to make the story of this is a 100-year-old incumbent, slow to innovate, not nimble, set in their ways, don't have technology, don't have the know-how. But what you're looking at is, at the beginning, for instance, Hippo and Matic, in my mind, were very much alike because Matic had the comparative angle, but they were targeting homeowners through the mortgage or origination process, right, through via APIs or B2B2C model. And now Hippo has graduated, and two of you believe that they're competing with Lemonade. I'm on the fence on that one, but you're seeing Root versus Branch.
Competing in the eyes of investors, in the eyes of the public opinion of insurance. That's what we say.
For sure.
At least that's what I mean. Yeah.
Yeah. American Family is an investor both in Branch and in Clear Cover. Obviously, Clear Cover isn't about bundling, but it's becoming more and more challenging. And to your point, in terms of failing, nobody's rooting for anybody to fail, but in reality is in insurance, you don't typically see a lot of failures. I mean, the average is so low. Like, a lot of people can succeed in the industry, and I think that's what people find attractive.
Yeah.
So, for now, I want to keep this on a positive, because this is all, this is all a milestone for these specific companies, right? Hippo, huge milestone. Branch, huge milestone. I think that the third company that we're going to talk about. So, congratulations to all of you, right? That's what I would say.
I want to add a point about Branch, and this is where they'll need to have patience, because, and again, Hippo is the use case for that. They can't rely on EverQuote to generate leads for them, because EverQuote is promoting their car insurance, not bundling, because they know that poor people, they may own a car, but they're still renting, and we want to save them money. If Branch is looking for a specific audience that should be, not everybody, of course, should be more kind of fine and like when it comes to their expenses, finances, and all that. So the process is going to take longer. They'll have to work with agents, because no way that they're going to get these customers online. So it's going to be a slower process. It's going to take them time to kind of build their book and attract the customers. So I think it would be interesting to see how they operate. And I find that always, in startup world, that patience can really throw you off, because you might think that because it's going slow that you're failing, that you're not doing it right. But it's just the nature of it. It's going to take time. And you mentioned about you don't know if you see like Lemonade fail and Hippo fail and Branch fail. Right now, Lemonade is a success story, right? But 10 years down the road, we don't know how they will be. And again, they've returned their investment to their investors and the founders, and that's obviously a success story. But if you look at it from, is this a successful insurance company? Time will tell. And I'm still kind of how they have these great prices and they spend a lot on marketing, and the losses, as you said, most of the losses are now by reinsurance companies. So when they say no more, that may kind of be a problem for them. And the same thing for Hippo, because look, when you rely on agents, and that's the problem, like in today's day and age, and we're going to get to the third company where you mentioned Metromile, and we'll get to that. You really can't be too confident, because there's another entity that's between you and the customer. So that's a problem. You really need to be able to say, I have a brand, I own the customer, I have the best product. Hippo doesn't have that.
But David, so I'll push back a little bit on that, because that's been well known.
Yeah.
Since for decades and generations. That's when carriers that use agents don't really own the customer. The problem is the carriers that go direct. David Wright, one of my friends, former reinsurance broker, wrote a great article once talking about brokers and carriers. Carriers can't afford to have too many bad accounts come in. It can be devastating to their book. Brokers don't care.
Oh yeah.
Brokers need to put accounts wherever they can put accounts. So at the end of the day, as much as the agents own the customer, right? They own a lot of bad customers. And so it is incumbent upon the carrier that is working with agents to treat the agency system as their sales force, as if they were in-house, and educate them, train them, meet with them, incentivize them. There's this conflict that sort of develops over time, and I think that conflict goes away if you decide to go direct, but going direct has its own problems. It's really expensive. You have to devote a lot of internal resources to acquire those customers, and still you have that problem where you can't accept all the customers anyways.
But you know what? It was interesting now. I recently leased a car, and I went with Gabby, just because who wants that? Like I went on progressive.com, I went on Geico, I think went to Liberty Mutual, and I eventually went to Gabby. They compared, and Progressive was on there, Travelers was on there, and then I went to Jerry. So I bought from Gabby, but then I go to Jerry because I'm never sure. Did I make a good choice?
I haven't heard of either of those.
So they're very popular amongst, I would say, like the digital broke consumers. And Jerry, I think I haven't seen an amazing flow like that. You just put in your phone number and they get all your information. They know your driver's license, they know the type of car you have, and they just say confirm, 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 and you can edit very quick. And behold, Travelers was there as well, just like they're on Gabby, and Progressive was also there, and Plymouth Rock, and another company. And for Travelers and Progressive, as you said, Nick, going direct is very expensive. They've also figured the secret of we really need to be everywhere with agents. And I wonder if Branch will go that route. Will they be on these comparison services or these kind of like agencies? Because there's a lot of traffic coming in, a lot of customers. But you look at Travelers' approach, and they want to be very competitive. So actually, their price on Gabby was one, and their price on Jerry was different, a little cheaper. So I tried to switch, but they said, "Oh, no, you already have the higher quote. We got you, so we're not going to let you." But there's really, you got to be everywhere, as we always say, and I think that will be key for every insurance company if you really want to grow. And I feel like for InsurTechs, they're going through more. Yeah, they're going through more because again, there's more pressure.
But to both of you, let me before we go to the final company, let me ask you, Shefi, Avi, you haven't seen a broad swath of these InsurTechs coming in. If you were running those and you had to choose between going direct, using agents, or a combination, which would you choose?
Combination. I would choose a combination.
Going direct part-time.
Yeah, I would choose agents. See,
yeah.
And I have a thought process around that, which is just that the sales is really hard. So I want to be very picky about which agents I go to, which is what my day job, that's what we do. Very picky about who we choose to partner with in those kind of situations, but it's hard. We talk about it all the time, distribution, and just how expensive it is to acquire a customer. And that's the interesting part. So I'm not rooting for failure. I actually think the three companies we just discussed, I think all three are going to be just fine. Once they get a customer, I think they'll have good enough retention to be able to hold on to it. My only concern is valuation. I think the valuations are just astronomical for what I think the ceiling is on this, but I think all three companies are going to survive. So those are three approaches. There's a fourth approach. There was another big company that announced this week, Shefi.
Tesla?
Who was that company? Yes.
Well, Tesla had an earnings call, and basically they were kind of laughing to themselves about, we're going to get one insurance question, and of course they did. And as you know, Tesla is offering insurance in California to its drivers. And it's through a relationship with State National. So they didn't say much, but of course, just like Elon Musk, everything is big and grandiose. And he was making the promise that he's going to build a major insurance company. And this is very early. What we're seeing right now is just the very early beginnings and getting a feel for insurance. And he, his love for actuaries that understand math. So obviously
I saw that.
There's also a lot of job posting, not a lot, I would say maybe 5 or 6 job postings around insurance. One in Berlin that I saw. I think there's one here in the US. So there's mix and match, obviously ones to watch. And as you remember with General Motors way back when in the days, entering the insurance space was very successful for them. So so this company has a history of upsetting car people, and he's currently upsetting insurance people. I just want to take the other approach that, you do expect outside entrants to come in and be successful. I don't think, insurance is like building rockets. So one to watch for sure.
Okay, so what do you think he's going to do? Is it an expansion of what they're currently doing? So they'll be focused on Tesla car owners and insurance for Tesla car owners, or you think there's something bigger here?
Bigger like Mask Motors Mutual?
Yes.
I think, yeah.
Go ahead.
I think the confidence comes, and he always talks about it, give an insurance that's suitable to the Tesla car with the safety features and the demographic and all that. That's what I think. I think it's funny because when on the conference call, they were saying that this insurance version is 0.9, not even like version 1. And the reason I think he's saying that is because I feel he really feels that the price point should be more attractive, because we saw this when they launched. You could argue that Tesla car owners are like really devoted to the Tesla brand, really devoted. Yeah. And they didn't go with the insurance offer they got immediately if it was more expensive than Progressive or Geico, for example. So he knows that it's about price. He knows that he can create a car that is more expensive than other cars, because a car is different than a piece of paper. So that's, I think, where he wants to go first. But I think it's going to be something every car company is going to strive for. Can we, and because now there's, when you go on Liberty Mutual, for example, they ask you, oh, what safety features does the car have? Does it have the lane assist? We'll give you extra points for that. Every car company that builds cars and uses technology, I think they're going to come and say, can we make more money selling insurance? Not necessarily be the carrier, but partnering with a carrier that is interested to work with us because they know that we have good cars. And obviously the driver is a different question, but that's, I think, where they're going. And you talked about, Metromile being able to pilot and Hippo and the speed and all that. Good for them until the actual company that owns the product comes in and says, well, let us show you how quickly we could pilot.
Sure.
Yeah, and I think that's what it's going to come to. And this week there was a story about another connected car company and how they're all going away from the dongles, because apparently it's more cost friendly and user friendly to do over the air updates as they're talking about now. And Tesla started with that. Once that happens, then it's really up to the car company to say, hey, insurance companies, we're open for everyone, or hey, let's find one company that could give us a price. And when someone is buying the car or leasing the car, do you want the insurance? Like, you should buy this insurance because we'll tell you, we have the confidence it will be cheaper than any other company. And if they have that confidence to say, and they could show it, people will buy. And a lot of it is not so much about making the money. I think when Tesla went into insurance, Shefi, if I'm correct, they really had an issue where a lot of people were not buying the car because of the insurance, because it was hard to get the insurance. So he wanted to solve a customer experience problem, not so much about making money. And I don't know if he's going to make money from insurance. Maybe not.
So he is a bit of a celebrity, and if we think back in the days when Lemonade got some backing from Ashton Kutcher and, he was tweeting a bit about InsurTech, that's the status of Elon Musk, right? And people were complaining about the price. In their mind, their price of insurance didn't correlate with this value proposition of a safer car. And if we talked a little bit about American Family. American Family in its portfolio has a company called Avenue, which is all about smart insurance for smart cars, right? Still in emerging mode, not quite sure. I mean, they've been in emerging mode in my mind. It seems like forever. But to them, Tesla starting to offer insurance is basically it's taking away a pie of their target market. So it shouldn't be that, it's not that big of a challenge. Do I think he needs to build a carrier? I absolutely don't think that's necessary, but he needs a partner that will be willing to incorporate his data. And so a lot of these insurtechs, they boil down to data. And so my final point about this conversation, when we look at Hippo, Lemonade, Branch, who has data that is the easiest to work with? And I think that's Lemonade, because they're targeting a very homogeneous group of people. And it's still just the renter's insurance, which, Nick, to your valid point, is a smaller market than home insurance. But building insurance the right way, which is why I say I would go with digital, but part-time, and nothing of this grand valuation, just a different way to build an insurance company, then I still lean towards the Lemonade model.
Yeah. Well,
Final points, everybody.
Final points.
Avi?
Avi, go.
It's I think at the end of the day, Shefi said data. If Lemonade or Hippo or Branch, the thing is, that's not the game. The game is not insurtech or insurance companies. The game is every company in this world, and automakers have the data. Smart home manufacturers have the data. Banks have the data. Fintech companies have the data. Insurance companies are not even in the game. They're in the game when they're able to get into that distribution partnership. So if you're able to do that, good for you. If you're not able to do that, you're in a lot of trouble. And, it takes time. And I was speaking this week to someone that was trying to get their product, a life insurance company's product, on his platform. And the life insurance company was saying, well, we don't like to be compared. We don't want to be a commodity. And I feel like a lot of insurance companies right now, they feel that they're fine because, it's they're kind of little punches they're getting. It's not a knockout, because no one cares about insurance, for the good and for the bad. So it's going to take you time, but one day you may wake up and say, oh boy, what happened? Where did all the people go? Why didn't we grow? And that's, to me, at the end of the day, that's what it is. Whoever has the data, whoever has the customer will win. Insurance is a product that's necessary, and it will be integrated in some way or another. Maybe Progressive will buy Tesla. Well, they can't. I don't think they can with the valuation, but maybe someone will. I think they were talking about Berkshire Hathaway maybe working with them in some way, but that's what it is. And I really don't think that insurance companies, whether you call Lemonade, Hippo, or Branch, for the long run, for now, go for it, make an exit, make an IPO, make your investors happy, make customers happy. But I don't see any real, game-changing models here.
Okay. Shefi, was your final point your final point?
For sure.
Okay. My final point. 4 different companies, 4 different models, all 4 will be successful. Just a question of degree. But great conversation, guys. Thank you. Be safe, wear your masks, wash your hands. Shefi, Avi, have a happy Friday, happy weekend, and happy weekend to everybody.
Thank you.
Happy weekend.
Bye, everybody.
Okay. Bye, everybody.
Bye.
Beep, beep.